formed a higher high major trend reversal. I want to talk some about second leg traps. I think they're very important and they create a major problem for traders starting out. Here we have a bull channel, maybe a wedge, 1, 2, 3. Complex first leg up. The bears tried to reverse down, but then look what happened. 4 bull bars closing well above their midpoints. 2 of them are very big bars closing at their highs. It looks like this will result in a second leg up. So the first reversal down, bulls probably will buy and will then resume up. I say that without showing the bars on the left. If this is still part of a big trading range, or if it's a part of a big broad bear channel, then the odds of this being a successful breakout are much less. Traders want to see what the follow-through looks like. We're getting a bull breakout above a bull channel, and you know that 75% of the time, if you have a bull breakout of a bull channel, it's going to reverse down within about 5 bars. In fact, if you have a bull or a bear breakout of a bull channel, it'll reverse within about 5 bars. For example, I could draw a line along the bottom, and we have a bear breakout below that channel, and then we reversed up. If this exact breakout was occurring out of a trading range, the odds would be 60% chance we would get a measured move up. But because it's a bull breakout of a bull channel, 75% chance it's going to fail. Remember the market cycle. A trend starts with a breakout, moves on to a channel, and then to a trading range. That's what happens 75% of the time. Only 25% of the time do you get a bull breakout, a bull channel, and then another bull breakout, starting the market cycle over again. So bull breakout, pullback, and then another channel before the trading range begins. Because this is a bull breakout of a bull channel and not a bull breakout of a trading range, 75% chance it's going to fail within about 5 bars. As I said, this is a tight channel. You can call it a complex first leg up, a wedge top. The bears tried to reverse and failed, and now the bulls are again trying, so this is a second leg up. And look what followed. Strong bull breakout, terrible follow through. Probably buyers below. Bulls will probably buy the first reversal down, and they did, but not for a swing. They were scalping out. The bulls who bought this close, disappointed by this. A lot of them bought more, maybe a scalp below, and tried to get out break even at their original entry. And now we have a micro double top and a second failed breakout above the top of the channel. Here's the first failed breakout above the top of the channel, and this is the second one. Most bulls would get out below this bar, and the result is a give-up bar here or here, and bears will sell below this bar. Not many bears will sell here after this much strength. Once the breakout fails a second time, a lot of bears will start selling, and this is an example of a second leg trap. Strong second leg, beginners see the 4 bull bars, and they believe the market cycle is starting over, and that it's going to lead to a measured move up and a swing up. But they're overlooking the reality that this is a bull breakout above a bull channel. And 75% of the time, you're going to get this, a reversal down to the bottom of the channel. Complex two-legged rally. The first leg was a wedge, and then a reversal attempt, and now another breakout, and then a second reversal attempt. You can also call it a complex top if you want. We tried to top out here, it failed. We tried to resume up, and that failed. This then is the second top. The wedge top is the first. This micro double top is the second. Bulls disappointed by this bear bar. They get out break even here or here, and the bulls that did not give up here. A second entry for a failed breakout of anything is a higher probability trade. And this is a second entry for a failed breakout above a bull channel. And it has a good sell signal bar, and it follows a first entry that also had a good sell signal bar. So this is a higher probability sell. Big up, big down, so big confusion. Big confusion usually means the market's going to go sideways, and it went sideways for about 10 bars. reasonably strong bear breakout. Probably sellers above, probably the first reversal up, bears will sell it, and then a second leg down. But sometimes the second leg is brief, only a single bar. For example, after this big bull breakout, this was the second leg, just a single bar. At this point, traders are hopeful that this is a bull breakout below this bear channel and that it results in a measuring gap. Maybe they'll look at it as a double bottom, this low, that low, and a bear break below a double bottom. A double bottom is a trading range. A lot of traders are hoping that this is a bear breakout below the bottom of a trading range. But is it really? We're still above this low. This may be a sell vacuum test to the bottom of a bigger trading range down here. Yes, we've broken below a double bottom, good for the bears. Big tail on the bottom of the bar. The bars are not all that big. We're still above the bottom of the bull trend. This could be a second leg trap. Again, a complex two legs down. This could be the first leg down, and then a pullback, and then a strong second attempt down. You got to watch out, it could fail. The bears hope it's a double top bear flag. So bear trend, double top bear flag. The bears hope it's a failed breakout below a double bottom, but look to the left. We still might be in a trading range. And look at the follow through after the breakout and then the reversal up at a second bar. At this point, a lot of the bears would be concluding that it's a second leg trap and that we're going to have more trading range price action to the right, which we did. This could be the first leg down. You could say this is the first leg down. All of this is the pullback from the first leg down. You can call it an expanding triangle or trading range. So first leg down, and then a pullback, a complex pullback, and then a second leg down. And the second leg down failed. Trapped traders into selling low in what would possibly be a trading range. Again, we're below the bottom here, and this big tail here, and the bad follow through after bear bars here. Bear, bull, bear, bull, bear, bull. It looks like the bears are taking control, but as soon as they broke below the bottom of this upper range here, they had a big tail here. They tried to resume down, a gap close of this bar below that low, immediately reversed up. So these bears are, at this point, really concerned. They look to the left and say, uh-oh, maybe this is not a successful breakout. Maybe this is just the second leg down in a big trading range. Trading ranges are filled with two-legged moves. One leg up, pull back, second leg up. One leg down, pull back, second leg down. Second leg traps, they always look strong enough so that traders believe the odds are there'll be one more leg up. But instead, you get the reversal. You have to be very careful buying above a bull channel. You have to be very careful buying near the bottom of what appears to be a trading range. The second legs are often stronger than the first. This clearly is stronger than that. This is not really stronger than that, but it's still a fairly strong second leg. Just like two legs up here, this second leg is stronger than that first leg. And it's always tricking beginners into believing that it's a successful breakout. It is of these past 20 bars, but not above the top of the entire range. And the beginners buy here or they buy up here. They sell down here, hoping for the breakout, ignoring the reality that 80% of trading range breakout attempts fail, no matter how strong they are. And very often, the second leg is especially strong, looking like it's going to result in a breakout, but it does not. Bears get trapped into selling low, just like bulls get trapped into buying high. And if you do buy up here, you have to get out, especially a second entry short with bear bars. If you do sell down here, not a very strong breakout, I think you have to get out above this bar, a failed breakout below this double bottom, and a higher low still in this trading range. Again, another second leg trap, two legs up, the second leg stronger than the first. Beginners buy, they only see this, and they ignore this. They ignore that we're still within the trading range. Here, you can say this is above that low, and maybe this is the start of a broad bull channel. So we have a higher low, strong second leg up, maybe we'll get a higher high. And it could be. However, it's also possible to be a second leg trap in a trading range. And whenever the market is in the top third of what appears to be a trading range, or what could reasonably be a trading range, I think it's better to look to take profits and begin to look to sell. This is what the bulls are hoping. They have a higher low, and they're hoping that this will be above that, and that we're in a broad bull channel, and they can take profits above that high. However, once you see this, you got to get out. You have to assume it's probably a trading range, especially when it's a second leg, one pullback two, especially when it's a strong second leg followed by a strong bear reversal bar. Strong sell-off, 5 consecutive bars here. Bears are hoping that it's a lower high, and maybe it's the start of a bear trend, and maybe it'll sell off below this low. They want a broad bear channel, but I always assume it's a trading range unless I have strong evidence to believe otherwise. In this video, I talked about how